Hi everyone. In the last class, we have seen 6 basic accounting concepts, and the remaining concepts we will be discussing in this class. So the seventh one is revenue recognition concept or revenue realization concept. So this requires that the revenue for a business transaction should be included in the accounting records only when it is realized. Realized means only when it is received. And eighth point is matching concept. It states that expenses incurred in an accounting period should be matched with revenues during that period. The matching concept implies that all revenues earned during an accounting year, whether received during that year or not, and all costs incurred, whether paid during that year or not, should be taken into account while ascertaining profit or loss account for that year. Ninth point is full disclosure concept. Information provided by financial statements are used by different groups of people such as investors, lenders, suppliers, and others in taking various financial decisions. Full disclosure concept requires that all material and relevant facts concerning financial performance of an enterprise must be fully and completely disclosed in the financial statement and their accompanying footnotes. 10th point, consistency concept. The accounting information provided by the financial statements would be useful in making conclusions regarding the working of an enterprise only when it allows comparisons over a period of time as well as with the working of other enterprises. 11th point is conservatism concept. This concept requires that profits should not be recorded until realized, but all losses are to be provided in the books of account. This may be reflecting a generally pessimist attitude adopted by the accountant, but is an important way of dealing with uncertainty and protecting the interest of creditors against an unwanted distribution of firm's asset. And the 12th point is materiality concept. This requires that accounting should be focused on material facts. Materiality of fact depend on its nature and the amount involved. Any fact would be considered as material if it is reasonably believed that its knowledge would influence the decision of informed user of financial statements. And the last 13th point, objectivity concept. This concept requires that accounting transactions should be recorded in an objective manner, that is, free from the bias of accountants and others. This can be possible when each of the transaction is supported by verifiable documents or vouchers. So the basic accounting concepts are over. Now, system of accounting. System of recording transaction in the books of accounts are generally classified into two types, single entry system and double entry system. So what is single entry system? It is not a complete system of maintaining records of financial transaction. It does not record dual aspect of each and every transactions. Only personal account and cash book are maintained under this system. No uniformity is maintained in the recording of transaction. This system is incomplete and unsystematic and thus not reliable. Single entry system is followed by small business organizations as it is very simple and flexible. Now what is double entry system? It is based on the principle of dual aspect, which states that every transaction has two effects, that is receiving of a benefit and giving of a benefit. Therefore, each transaction involves two or more accounts. This system is accurate and more reliable as the possibilities of fraud and misappropriation are minimized. This system can be used in both big and small organizations. Now comes accounting standards. Accounting standards are written policy documents converting the aspects of recognition, measurement, treatment, presentation, and disclosure of accounting transaction in financial statements. The objective of accounting standard is to bring uniformity in different accounting policies in order to eliminate non-comparability of financial statements. Now about GST, which is very familiar to you. The word GST, Goods and Services Tax. One country, one tax. That is the main aim. So GST is a destination-based tax on consumption of goods and services. Only value addition will be taxed and burden of taxes to be borne by the final customer. There are three main components of GST: CGST, SGST and IGST. What is CGST? Central Goods and Services Tax. In this, tax collection or the revenue is for central government. Then SGST, State Goods and Services Tax. So here revenue for the state government. And the last one is IGST, Integrated Goods and Services Tax. This tax is divided between central and state governments as per the rules specified by government. Then IGST is charged on transfer of goods and services from one state to another. Import of goods and services also covered under IGST. Hope you understood all these topics what we have discussed today. Thank you.